My name is Dr. Stanley Okoro. I'm an ANPA physician. ANPA means Association of Nigerian Physicians in America. Welcome to our ANPA webinar series. Today we're going to be talking about 2020 tax planning and year-end strategies for doctors. We've assembled a lot of experts today, but before we get to that, I want for everyone to know what ANPA is about. Our national president, Dr. Chris Okunsiri, is here to tell us about ANPA. Chris, over to you.
Thank you, Dr. Okoro, for this fine opportunity for our organization. As many of you are very much aware, ANPA is a 501c3 organization. We are well over 25 years of age. We continue to grow. We represent a huge number of physicians, dentists, and allied professionals who are from Nigeria or are married to Nigerians. And pretty much we are at the forefront of professional development, creating opportunities for leadership, and also advancing opportunities for practice referrals and building networks amongst ourselves and other stakeholders within the medical and dental profession. We are very much aware and very much ready to support members in times of needs and joy. And we engage very seriously in actions that are critical to our mission, which is the medical mission and volunteerism. So you can see that this organization is strong. We are grounded in our membership, and we continue to take opportunities to see how we can grow our membership, provide value for our membership. And on the strength of what I have just said, I want to quickly take this opportunity to thank all the participants and the speakers for actually bringing this value to our membership. We think this is timely. This is great, and I really, on behalf of the ESCO and the organization, and also special thanks to Dr. Stanley Okoro, who has been at the forefront of webinar series for our organization. I really thank you all, and I hope and look forward to exciting presentation. And also I have my notepad here to jot down things as well. Thank you very much.
Thank you, Mr. President. I appreciate your leadership. I just want to kind of give you a little disclaimer. The materials presented at all ANPA webinar is for general educational purposes only, and is solely for the opinion of the presenter. No webinar is intended to provide personalized financial or legal advice. It is left to the discretion and judgment, and is the sole responsibility of each attendee to determine what is necessary for his or her own practice. Neither the speakers or ANPA can be held responsible for the materials, opinion, or any inadvertent error or omission in the preparation or presentation of the material. Further, nothing in the material should be construed as an endorsement by ANPA. Without further ado, we're going to jump right in. This presentation is being brought to you by the world experts, Amy, I'm going to let you introduce yourself and your team. And Vicky, you can start to share slides here at this point, okay, after Amy's introduction.
Hey, thank you very much, Stanley. Welcome everyone to another in the series of webinars that were initiated by Stanley. Stanley is a visionary, and I'm sure that you're experiencing his visionary leadership, because when he started this whole thing and I approached him about an educational series, our minds connected immediately. We got it, he got it. He understood the importance of financial intelligence and education. And as your immediate past treasurer, he saw this as an important legacy and a very important benefit of ANPA membership. So this series is really about all of you, arming you with, on a monthly basis, financial intelligence. We're going to be doing this the first Saturday of every month, 12 noon Eastern, 9 a.m. Pacific. It's a 1-hour session. We're going to bring to you top experts in the industry, thought leaders, superstars. What we've done is very rigorously aggregate expertise that's differentiated. The reason that they're going to be speaking to you is because they understand that doctors are different. A lot of things about your life cycle is very different. The way you practice, the way you live, and all those things. Those are important elements. Doctors have a totally different life trajectory versus everybody else. You have a compressed earnings cycle. You have assets and intellectual property that need to be protected. You need this kind of information that is very targeted, very surgical, and very differentiated. That's what we're going to bring to you, ANPA. That's what ANPA is going to bring to its members on a monthly basis. So I am going to introduce the first speaker, Dr. Vicky Rachner. Vicky, as I affectionately call her, is a surgeon. She's one of you. And we wanted Vicky to launch the series because she gets it. Vicky serves on my firm's advisory board, Wealth RX for Doctors. And her vision has been, you can see her vision in everything we do. Vicky is a keynote speaker at national events, local, and so on. She's an author, she's a coach, she's a consultant, she's everything, an expert in litigation. She is a serial entrepreneur. I love Vicky. We share a very deep compassion and passion for what we do, helping doctors. The next speaker after Vicky will be Simon. Actually, what may happen today is Simon may be a tease. Simon will address case studies, or one case study at least. I've known Simon for a few years, and Simon is an expert of experts, and he is a perfectionist. Simon has been in the business since 1966. He is one of the top experts in our industry. He's an acclaimed author and an expert in a lot of things that have to do with tax planning, estate taxes, and so on and so forth. One of the things that we share in common is our very deep commitment to perfection and excellence. And that's something that we have in common, among other things. So Simon will at least share a case study with you, and hopefully in the future, in one of the future series, we'll have Simon do a full blast of a presentation that actually shares differentiated expertise. I am going to hand it over to Vicky. So you go ahead, my dear, take over.
All right, Vicky, you can go ahead and share your slides now.
All right. All right, let me stop and restart here because it said that I was sharing. Are you seeing it?
Yes, can you go to full view, possible? If you don't have it, it's okay. I think you're on a web.
Okay.
I'm going to
All right.
We can see your slides, Vicky.
Okay. Well, let me get it up. But as I'm doing that,
once you get it up, let me know. I'm going to share my slides while you get it up. Okay, so you go right ahead.
Okay, so I would like to start out with the story of a real financial home run. So I was talking with a tax strategist, and he said, Dr. Vicky, I want to tell you a story here. And that story is that I was working with an orthopedic surgeon, and I thought that I had saved him $925,000 in taxes this morning. But you know what? I made a mistake. It wasn't $925,000 in taxes. It was $948,000 $100,000 in taxes. And this was an amazing thing. So this orthopedic surgeon had been thinking that if you could advance to the next slide, please. Next. Back. And I'm so sorry. So this orthopedic surgeon was very concerned about taxes. He always had the sense that he was paying more than his fair share, but he'd been working with the CPA and he thought, you know, I've kind of got this covered. But something made him think, you know, there's got to be something more. So he wound up in the hands of actually one of Enye's team members, a tax strategist on the team. And sure enough, he was able to save taxes. So, and significant taxes. So, you know, we all sort of play financial baseball, right? We all have the same rules. We all earn income and we pay taxes. But really, there are some elite people who are really playing with the majors instead of with Little League. So today, we're really going to be talking about how big people in the majors play. So, and I'm sorry about this difficulty in pulling up my slides. So if I might just ask you to advance with me. So if you've ever wondered, you know, how am I going to recover from the COVID hit? Or how am I going to figure out my tax plan? Or how do I build wealth? You are in the right place. So next slide, please. So in today's session, we've got a couple of goals. First, we're going to talk about the connection between tax planning and wealth building. Next, we're going to talk about a new way to think about taxes. I want to just give you the overview of strategies about ways to legally and ethically reduce your taxes, and then share a couple of examples about how tax planning helps doctors like you. Next slide, please. So, in the spirit of full disclosure, I am not a money expert. I call on my experience as a practicing surgeon. I was primarily a breast surgeon and serial entrepreneur to help doctors thrive. So I do a lot of writing, a lot of speaking. And as I was doing so, I kept on running into the same problem with doctors. Doctors had visions about doing certain things, but the thing that held them back was not having the financial freedom to do what they wanted to do. I mean, one of the reasons I was able to become an entrepreneur is that I had a financial cushion, I had a fallback plan. So the more financial security you have, the more options you have. Well, I've made pretty much every single financial mistake that I see doctors make. And I just started getting curious. I started talking with doctors about their money stories. I've interviewed like literally hundreds of doctors and summarized what I found in some of my books. Next slide. So these are sort of the books that have taken me all across the United States, The Myth of the Rich Doctor and the 9 Money Mistakes that Doctors Make. So think of me kind of as a cultural anthropologist who has an intense curiosity about this. But I'm not going to give you financial advice, but I always want to identify industry experts who can. Next slide, please. So this is what I have observed from talking with some really smart people. So I just want to talk peer to peer with you. All right, the big question is, why might you be interested in paying attention to taxes? Next slide, please. All right, this is kind of a crazy world, right? And the way we are all staying sane is by separating the issues that we're dealing with into things you do not control and things that you can control, and then really focusing our energy there. Next slide, please. So we have faced many challenges that are impacting pretty much every aspect of our professional and personal lives. Of course, there's a COVID-19 pandemic. You know, what that has done to your own practice. We've seen a lot of volatility in the real estate market, and, you know, who knows what kinds of returns that you can get on your investments these days. outside of our control. But there are things that are inside of your control. There are ways that you can strategically generate more revenue. But the thing that we want to talk about today is that there are things that you can do to proactively manage your taxes. Next slide, please. All right, so as I was learning about things, I myself attend financial services meetings. I speak at these meetings to help financial services professionals really understand how doctors think. And I remember when I was at a meeting hearing a true thought leader speak, and he asked the audience, tell me, what is your number one expense? And these were financial services professionals, right? And they were saying things like, oh, my house, my toys, my kids' college education. And he said, no, your number one lifetime expense are your taxes. And this person, this thought leader who gave this presentation was Simon Singer, who you're going to hear from later in this presentation. But I was so struck by that, I went home and sort of drew this drawing. You know, all doctors are trying to navigate their way to wealth, which I think as the freedom to do what you want to do when you want to do it. But we face lots of obstacles as we're trying to do it. But you know what? I don't think any of us really understands how taxes fits in. And the moment I heard Simon, it clicked for me. Like paying attention to taxes is a high leverage intervention. Next slide, please. You know, there's a third reason. Let's think about how you build wealth. If you're like many doctors, you may have dug into your emergency savings if your elective cases have been canceled. And you might be thinking now, well, how do I replete those savings? You know, how do I get on track to retirement? And you basically have three ways of doing it. You can increase your income, right? You can get better returns on your investment, or you can lower your expenses. And since taxes are your number one expense, taxes are something under your control. Managing taxes is a very high leverage intervention to build wealth, to have that freedom to do what you want to do when you want to do it. Next slide, please. So, next slide. Please, next slide. All right, so I remember reading this book, The One Thing. And basically it says, look, if you look at high performers, all high performers have a roadmap about how to get to where they want to go. And it's not three things on their to-do list. It's usually one thing, like one pivotal thing. And if you can think of that one thing, you're going to get better outcomes. So I went to Enye and said, Enye, if you were to identify that one thing that would help physicians and dentists and other healthcare professionals build wealth, what would that be? And without thinking, he said, pay attention to taxes. Next slide, please. So if you control your taxes, you put yourself in the driver's seat in a high impact, low risk way. Next slide, please. So let us think about taxes. So I think a lot of us think about taxes as something punitive, right? Oh, I've got to write this big check and I've got to do it every quarter. But I remember speaking with a lawyer and he said, you know, when I went to law school, they had a whole different take on taxes. He said, think of taxes as a form of social engineering. This is a roadmap to help the United States build wealth. The United States knows that if we make certain investments in technology, in building houses, in creating jobs, our nation will be more wealthy. Well, if this is a roadmap for success, why not do this on a personal level too, right? So, next slide, please. So, billionaires already know this. Highly successful investors know this. They know, next slide, that if they can go with the momentum of the tax code, kind of like in a financial martial arts, that's going to help them more effectively build wealth. So think about this orthopedic surgeon I talked with you about, who's got almost $1 million more in that year to invest. Well, you don't have to be a billionaire in order to take advantage of this. You too can sort of work with the financial majors, if you will, and use some of these ideas as you think about how you build wealth. Next slide, please. So you might be wondering, well, gee, isn't that my CPA's job? After all, I have found a CPA who works with lots of doctors. I mean, he comes highly recommended. Why aren't I getting this good advice from him or her? And the answer is that a CPA has a specific job. They serve as a tax historian. So at the end of the year or at the end of the quarter, they look at your activities and say, okay, this is how much you owe in taxes. But that's not how billionaires do things. What they do is they proactively think about how to position themselves. You know, they think about the right corporate structure ahead of time. They think about strategies for real estate investing, for example, ahead of time, in order to wind up with the tax bill that they want. So if you're working with such a CPA, hopefully when we had the new tax law, they came to you and said something like, look, we've got a new tax law, the most innovative tax code in probably 50 years. Let's think about how we can harness the momentum of this tax code to help you build wealth. If your CPA did not do that, then you are probably working with somebody who has this mindset of, okay, my job is to give you the bill and let you know how much taxes you want to pay. But we are talking about something different today. We are talking about true proactive tax strategies, right? So when I treated women with breast cancer, they had any number of therapeutic interventions. And our job was to choose the best interventions for you. So too, there are a number of ways that a tax strategist can help you save taxes. Next slide, please. And I'd like to, next slide, I'd like to really quickly go through what the three major things are. So, you know, with my breast cancer patient, I would say, look, there's three classes of intervention. There's operative intervention, there's chemotherapy, and there's radiation therapy. Well, when you're looking at tax strategies, there are three basic kinds of intervention. One are code-based strategies. So using the tax code itself to help you lower your practice. It's this financial martial arts that I was talking about. So the driving force behind the 2017 tax code was really helping the United States be more competitive in a global economy. Our corporate tax rates were very high. The idea is if we could lower these corporate tax rates, we would invite investors into the US. So really the key is about corporations. So do you have the right corporate structure? Because a change in corporate structure could mean, you know, savings of tens to hundreds of thousands of dollars. There are also ways to shift income legally and ethically. So we're not talking about tax evasion, right? But we're talking about real things. So my college-age son, after he graduated, he actually came and lived with me, of course, rent-free, right? And he would frequently help me with my technology. Well, people like Simon and Enyi pointed out to me that, wait a minute, you could probably hire him. Maybe you hire him for the equivalent of rent. And then that bundle that you paid him, let's say like $50,000, he would be taxed at a much lower rate than I did. So great idea. Probably a lot of you are seeing patients from home. Do you know how to take advantage about all of the home office tax deductions? Did you know, for example, this is something I learned from Simon and Enyi, you can rent your house to yourself for a practice-related activity and get a deduction from that. So the tax code is just filled with opportunities like this, and many of them are overlooked. Next slide, please. All right, there are product-based strategies too. So you know, just like we have therapeutic interventions, just like we have different medications, so too there are different financial products that you may or may not have access to on your own. But tax strategists, wealth strategists know how to use these products to basically take the money that you would pay in taxes to Uncle Sam and put this in your very own pocket. And some of these are virtually unknown to physicians, but could, again, mean significant tax savings for you. And some of the ways that you can do it can actually accelerate wealth building, because you can tie this to a product where you basically, the government basically rewards you for making investments into your own retirement planning. Next slide, please. The third are timing strategies. So you can decide, you can pay taxes now or you can pay taxes later. So in most cases, of course, it makes sense to think about sort of kicking the tax bill down the road. However, I don't know what you think will happen to taxes in the future. But if you talk with people like Inye and Simon, my guess is that they're going to project the taxes are going up, because how else are we going to manage our debt? So if you think about your income, you can place your income in one of these three buckets. There's income that's taxable, right? You can place your money into some programs that will allow you to defer the tax bill until you withdraw it. Now, I will tell you that my dad thought he was set for life because he had stashed away a lot of money in an IRA. And boy, was he mad when he finally got into retirement and realized that this wasn't all his, that a lot of this belonged to the government. So there are some risks associated with deferring taxes. Of course, what we all want to do is put our money in this tax-free income. And a true tax strategist will help you allocate your income, including income from capital gains, things that you might have gotten as gifts, into these three buckets in a way that will help you build wealth. Next slide, please. So as you think globally about wealth, about what you're going to do today in the midst of a COVID pandemic, what you are going to do tomorrow, and what you are going to do in this coming year, you might want to ask yourself, where do you want to really put your attention and your risk? And I speak with an awful lot of physicians who are really focusing on investing. Okay, I just need to think about investing in a new and different way. I want to invite you to really listen to what you're hearing today and put the focus on tax savings. This webinar is being recorded at the beginning of September. We have 4 months left in September. So you can do some very, very powerful things today and over the next couple of months to potentially decrease your tax bill by tens to even hundreds of thousands of dollars. Next slide, please. So now I would like to turn it over to one of my mentors, somebody who's really helped me understand how to optimize financial health, and that's my colleague, Simon Singer.
Thank you, Dr. Vicki. Always appreciate your extremely appropriate perspective on things. As you've taught me, doctors process information much differently than somebody that owns a shoe store or somebody that owns a McDonald's franchise. And so it's important to understand that and how they focus and how they make decisions. The first thing that I'd like to say is that it's important when you get a tax planner to insist that they do a diagnosis first before presenting you with a treatment plan. So it'd be very similar to the way you doctors conduct your practice. First, you've got to gather a lot of information, including historical perspectives of the doctor's history, the medications that he's taking, the illnesses that he's had in the past, what his ailments are right now. So you first have to diagnose, then you define what is it that they're trying to accomplish. And then secondarily, you need to define, all right, how much do they need in order to be able to retire, maintaining the same lifestyle that they have now. And that's something that's called a present value calculation. Just so you know, I am not the smartest guy in the world. I've learned a lot from tax attorneys and CPAs, but Dr. Vicky is exactly correct. Typically, and I'd say probably 95 out of 100, while the CPAs might know the tax law, they do tax planning in the rearview mirror. So everything is based on what happened in the past, not what's going to happen in the future. And she's also absolutely correct. In my opinion, we have a $26 trillion deficit. I think we're probably looking at 50% income taxes on a federal basis, as opposed to 37% right now. And then whatever your state taxation system designs. So it's going to be 50 plus, I'm in California, so it'd be 50 plus 13. And there's rumors that our tax is going to go to 16%. So that's going to be 66% of every dollar you earn is going to be taxed at a very, very high level. So it's important to be able to time, combine, and sequence. Most everybody in the financial services business knows of the individual elements. What they don't understand is how to put them together to create an effective plan. It would be similar to going into surgery and having an assistant surgeon and nurses and technicians and anesthesiologists. You've got to put all those together and use them in an effective format in order to create a whole that's significantly greater than the sum of its parts. So how much do you need to retire? We call that your critical capital mass, which in English means, do I have enough money so that net after taxes, whatever the tax rates are, net after taxes, indexed for inflation, my wife and I have enough money to be able to maintain our lifestyle. That's the first and most important factor. The next factor is how much do I want to leave my children, or how much do I want to leave to my charity after I pass away? But if you run out of money, then we haven't done our job correctly. And unfortunately, most doctors think that their CPA knows everything about the tax code. Well, it's 73,000 pages long. And chances are they know how to put the right numbers in the right boxes. And when they put the right numbers in the right boxes, Dr. Vicky was also correct, they'll tell you how much you owe. What we specialize in, along with tax attorneys, and if you don't have a tax attorney, you probably need to look for one to work in conjunction with your CPA, to work in conjunction with your tax strategist. In other words, you need a team, just like a surgeon needs a team. You need a team in order to put these pieces together to create effective structures to help reduce not only current income tax, but reduce future income tax as well. So, and then you need to monitor this on an annual basis. You can't just stick it in a drawer and forget about it. You've got to monitor it to make certain that you're compliant with what the new tax law might be, because this next tax law change isn't going to be the last one during your working lives and in your retirement years, because unfortunately, our politicians' job once they get elected is to get reelected. And they aren't terribly concerned with what's in the best interest of the company and its population. They're interested in being able to get elected. So you're kind of left trying to have to decide who you're going to work with and how you're going to work with them, and whether or not they make economic sense, and whether or not it fits with your philosophies. And he's a very talented individual in those areas, but there are others around as well. And then lastly, you've got to undergo regular checkups in order to monitor the progress and make adjustments, just like you would in a treatment plan. Next slide, please. So the independent practitioner, and there's different strategies for people that are employees of large medical organizations. You still have to define the appropriate corporate structure. There are LLCs, there are S corporations, there are C corporations, there's partnerships, there's sole proprietorship. Each one has advantages, each one has disadvantages, and sometimes you might have to use more than one structure, which means that you're going to have another tax return to file, which means that you're going to be paying your CPA a little bit more money, but overall, that is likely to save you $10 of tax for every additional dollar that you spend in CPA expense. The wrong corporate structure very well could cost you tens of thousands, if not hundreds of thousands of unnecessary taxes. Next slide, please. You can skip this one because the EGTRA law is no longer effective. You can skip this one as well because we're not going to have the time to go through this. And you're probably going to have to skip the next slide also. if you can read really fast, you might be able to grasp the context here. The context was, if you can save $10,000 in taxes over a 30-year career, that's $300,000 of tax savings. And there are opportunities in the tax code. The tax code basically gives you directions as to how you can just change the norm and do it legally and efficiently. You can skip this one too. Sorry. Keep going, sorry. This is basically just showing how important investments without taxes. People spend lots of times in trying to increase what their gross rate of return is without taking into account that the tax savings of, in today's world, 37% federal on a consistent, regular basis is going to be a lot more meaningful than earning 10 or 12% on your money. Because if you earn 12% on your money and you're in a 33% tax bracket, you're really only netting 8%. If you can reduce your taxes, you're having the equivalent of 37%. Next slide, please. Next slide, please. And the next one, and the next one. Okay, so let's go to an example with an ophthalmologist client that I've had for over 30 years. Next slide, please. Here's a 40,000-foot overview, just to give you an idea of where we're going. I was an acquaintance of the ophthalmologist. He was complaining about not being able to save enough for retirement. He had one of these CPAs who seemed to be very protective of his practice at the expense of his client. He thought that he knew everything, and every step along the way there was a battle. So this presentation is going to go through the structures, the result, and how I had to call in tax attorneys in order to offset the CPA, because we don't have as much credibility with our end user client base as the tax attorney does. So the objectives were reduce the current income taxes, protect assets and the claims of judgment creditors, fund for retirement, purchase a $400,000 home in Lake Tahoe. I need for you to go back a bit, thank you, and protect his family in the event of death or disability, and also to protect his family from possible litigation from a dissatisfied patient. Next slide, please. Here are the strategies we used. He had an existing retirement plan. He had a profit sharing plan, which means at the time, he was able to contribute about $30,000 a year, and he needed to do much more than that. A creation of a more tax-friendly retirement plan, allowing substantially higher tax-deductible contributions. Having the corporation implement a plan that allows the sharing of costs and benefits, sharing between the individual employee physician, and when this physician puts on another hat, he's also the CEO of his company. Next, okay. Have the corporation purchase a disability policy on the doctor, and fund for retirement. So how much was he going to be able to fund? So we were able to increase the current funding from $30,000 a year up to $200,000 per year. And he was in his mid-40s at the time. He did that for 10 years. That resulted in an annual tax saving of $85,000 annually. The retirement plan accumulated to $3 million as opposed to what likely would have been about $750,000. When we finally reached what was called the present value of the accrued benefit, meaning in English, that $3 million, we converted the defined benefit to a profit sharing plan. Now, the reason we did that was twofold. First of all, in a defined benefit pension plan, you have a statutory requirement how much can be distributed every single year. So if you want to start and stop, if you want to take more in 1 year or less than 1 year, you can't do that in a defined benefit plan when you reach retirement, but you can do it in a profit sharing plan. The only requirements in a profit sharing plan is you take out what's called the required minimum distribution, which typically would be about 4% of what the value in that retirement plan would be. There's also another piece. And the other piece is it's possible that if it's needed from a profit sharing plan, you could take a tax-free disability distribution, assuming you qualify for that. Well, this particular doctor did. So what we did was when we rolled the $3 million into the defined benefit plan, from the defined benefit plan into a profit sharing plan, actually, I need to correct that. $2.5 million went into the profit sharing plan, and $500,000 was rolled into a Roth IRA on which he paid income taxes. And the balance, the $2,500,000, was distributed income tax-free as a tax-free disability distribution. So when we went through that, the CPA says, well, he won't qualify for that. And I said, well, I think he will. There was a little bit of a hassle back and forth, had to call in a tax attorney. Tax attorney said, yes, based on his condition, we do this all the time. So next click, please. Here were the results in protecting the family. The Doctors Corporation purchased his own occupation disability policy on his behalf. When the doctor became disabled due to an accident at 55 years old, he was unable to perform surgery. He started collecting from his disability insurance, and we had submitted that claim based on the fact that it was an accident, not an illness. But at age 65, the insurance company decided they were going to change their mind, and they were going to no longer treat it as an accident, which meant that they were going to stop making disability payments, and they reclassified his disability as a sickness instead of an accident. The doctor was panic-stricken. So we recommended an attorney who specializes in disability lawsuits. I told the doctor that he was going to, in fact, be able to not only collect the back payments that they weren't paying him at the time, but it was actually going to become a significant financial windfall for him. Eventually, the disability company settled for all back payments. Next, please. To fund for future payments for the rest of his life, plus 50% in punitive damages after attorney's fees. Next slide, please. So here were the results. He protected a portion of his assets from the claims of judgment creditors by implementing an ERISA protected plan. ERISA stands for Employee Retirement Income Security Act. I believe it was 1974. And it basically said the only people, could you back up, please? The only people that can pierce that veil of protection of the retirement plan is spousal support, child support, and the taxing authority. It can't be a patient. It can't be a bad business transaction. The only people that can pierce is going to be the Internal Revenue Service, your state taxing authority, and spousal and child support. Next slide, please. By implementing the split dollar plan, which was being paid for in a 15% tax bracket, as opposed to his own personal 40% tax bracket, the doctor was able to purchase and remodel a $400,000 lake house. Next, please. Maintain and utilize the property for the last 35 years. The property appreciated at $2.6 million in value. And here's a recap of the tax savings. The defined benefit plan of $100,000 per year for 10 years was $1 million in tax savings. The split dollar plan of $30,000 per year for 5 years was $150,000 of tax savings. The savings on the distribution from the profit sharing plan, which would have been taxed at 50%, was now $1,250,000. The grand total of tax savings were $2,400,000. And there's nothing in here that we did. There was nothing in here that we did that that violated the tax code. In fact, the tax code encouraged the kind of thing that we recommended, and therefore the doctor was able to accumulate millions of dollars of additional monies. At this point, I'd like to turn this meeting back over to Dr. Rackner. Doctor?
Vicky,
Okay, so one of the questions is, well, with these kinds of dramatic stories, is this just, one or two doctors? And in my conversation with tax strategists, most of them concur that if you've got a doctor or a healthcare professional who's just working with a CPA, the tax historian, looking in the rear view mirror, chances are very, very good that, a consultation could save at least tens of thousands of dollars. So why aren't more people doing this? And if we could please go to the slide with the colorful pie chart. The answer is because it's something that most don't already know about. So if you go ahead and you take a look at any one thing that you believe to be true, it can fall into one of basically about 6 or 7 categories. In blue, there are things that you know, and you don't know. So you've got to pay taxes, right? And you know that you don't know enough about the tax code to do it yourself. So you're probably not using TurboTaxes. You're working with the CPA. But there are things that you know and ignore. There are things that you know, but were wrong. And there are things that you don't know. So hopefully the main message here is just to alert you to the possibility that there might be a great way of recouping those losses that you've sustained in this COVID pandemic without doing anything differently. But now you know. Next slide, please. Another thing that a lot of doctors are concerned about is, look, I don't want an audit. You know, if I start doing some of these fancy tax things, am I going to draw attention to myself? Unfortunately, the reality is that there's nothing that any of us can do to prevent an audit. You know, none of us want to get audited. But the kinds of things that Simon's talking about, if you document things, even if you go through the audit, nothing bad is going to happen. So documentation is going to be very, very important no matter how you decide to manage your taxes. But if you're working with a skilled tax strategist, then, you know, let the auditors come. And chances are very good that if you're doing things right, there will not be any penalty. In fact, one tax strategist told me about a doctor who actually got a refund after the audit. Okay, next slide, please. All right, so as I was mentioning, you know, there are 4 months left in 2020. And, you know, doctors who work with tax strategists beginning in January have more options than doctors who are looking at tax strategies in September. But there is still time to think about what it is that you want to do, how you want to manage your 2020 taxes. Hopefully you're already working with somebody who is helping you, but if you're new to this idea, you know, you might want to think about exploring this. All right, so what is your next step? At this point, I'd like to turn the conversation back to Enye to hear what he has to say about this whole topic.
Well, thank you very much, Vicki. I think that, thank you very much again, Vicki. I think that what we hope to accomplish in these sessions is educate you and arm you with intelligence enough for you to go out there and get the right kind of counsel. There are lots of qualified professionals that can provide you counsel. Our goal in the webinar series is education. It's providing you with the tools that you can use as a benefit of membership in this organization. I think that you're finding through the kinds of presentation that we are putting up here that this is time well spent. The expertise that you have and are experiencing just from the three of us here is well over a century of professional expertise, and that's very typical. So I would encourage you to think about what you're doing. And just to give you an example of something that you could do that with ANPA making this a benefit of membership, as ANPA continues to grow, it's 26 years old. If you do realize tax savings, and one of the things that Simon talked about Vicki, was what you do with the monies that you save. Clearly, the president, Chris, mentioned that this is a nonprofit organization. ANPA has causes that are important to you. This organization is 26 years old. It has a membership, paid membership, in excess of 600. And a lot of you are paying a significant amount of taxes. For those of you on this call today, if you just think about what you're paying in taxes and think about reducing those taxes and what you could do with the reduction, what you could do for yourselves in your retirement, what you could do for causes that are near and dear to you. ANPA has a mission, and that mission certainly needs to be supported. This is one of those ways that you can do that. Thank you very much, and we're going to open this up for questions. And Vicky, Simon, and myself will answer any questions that any of you have. Stanley, do you want to unmute yourself and join?
Yes, I'm here. Amy, thank you very much for putting together this great team to help us understand. I call this financial intelligence, and then I think Vicky called it financial literacy. The one question I have, because I have my own team already, as you know, and one of the things I'm learning now is we've all been taught to save money in this retirement, but like I think Vicky mentioned, taxes are gonna go up. So when I retire, I might potentially be paying more money in taxes than now. So is it better to save money in other ways? That's my first question. And the second question is, why are the politicians not talking about the tax increases that's coming next year?
Simon, you want to go with this?
I'm sorry, I thought he asked Dr. Vicky, but sure, I'll give it a go.
Okay.
Well, look, we don't have a guarantee as to who's going to win the election November 3rd. It could be the incumbent, Mr. Trump. It could be Mr. Biden. All we know is we have a $26 trillion deficit. So logic would dictate that one of two things happens. The government cuts back on expenses, which we know will never happen, or they will have to increase taxes. And they're not going to increase taxes on everybody. They're going to increase taxes on you because you are considered wealthy. And they're going to increase taxes dramatically on the people that they consider wealthy. And it's a relatively simple transaction to get accomplished with the voting public and with Congress, because the majority of people don't pay any taxes at all. And if you don't pay taxes, people have no objection if tax rates are going to increase on what they deem to be the wealthy. So I think it just makes common sense that taxes are going to increase. And if we're wrong and our clients are working on reducing their taxes on a statutory basis, then they'll wind up with more money. If we want to be wrong and have our clients wind up with more money as opposed to being wrong and then winding up with less money, that's all. And then the things that we discussed earlier, those are right in the face of the tax code. They're not super sophisticated. They're not super complicated, but in fact, they are ways to be able to save tax.
Vicky, you want to add something from the doctor's perspective?
Yes. All right. So I told you I've gone out and I've spoken with hundreds and hundreds of doctors, and there is this perception that doctors are wealthy. But when you look at some of the data, it tells a different story. The AMA insurance company does annual surveys with physicians. You know, do you feel on track for retirement? And consistently, about half of doctors say, no, I'm not on track. It also turns out that only half of doctors are working with professional financial advisors. And not surprisingly, those who are working with advisors are more likely to be on track. So I personally think that wealth is the freedom to do what you want to do when you want to do it. And as I looked at my conversations with, you know, these hundreds of doctors, I believe that it's a myth that doctors are wealthy. They may in fact be high earning, but many of them are just on the hamster wheel, right? They're just having to go faster and faster to not get behind. And so there are real and actionable things that doctors can do to change things around. You know, you can read about, you know, skip your latte, right? And that will save you, you know, $1,000 every year. But it's walking right past this reality that you might be walking past tens to hundreds of thousands of dollars in tax savings. So, you know, from my perspective as a cultural anthropologist, right? My opinion is that Enya's got it right. If you're going to think about the one thing that you can do, especially at this time when the COVID pandemic has had such a significant impact. You know, I'm a fellow of the American College of Surgeons, right? they've convened this practice protection committee, and they're giving talks about things like economic survival strategies for the COVID world. They didn't mention anything about taxes. And I guess that's not surprising because it was surgeons giving financial advice. So I hope that you're excited. I hope that you see that there is a viable path to getting back on track with taxes. And by the way, thank you for your service. I hope that all of you are healthy. I hope that your patients are coming back to see you if you're not doing primary care. But you know, whatever's going on out there, there are ways that we can respond, right? So that we will thrive. I believe that with every fiber of my being. Sometimes it means going outside of the box, but this can be done.
Stanley, I have a quick question, Stanley.
Go ahead.
So my question is, I hope not everyone on this forum is from Atlanta, Georgia. So if you were to advise those of us who are not within Atlanta, Georgia, how would you recommend we reach out to you guys, or do you have, you know, associates outside Atlanta, Georgia that we could reach out to actually, you know, expand on this discussion that you guys have shared with us, either going to talk to a tax attorney for those of us who don't have one, or talk to maybe a financial planner. You know, we are one of the 50% that do not have a financial planner, but we have a CPA that we think does everything for us.
Sure. Thank you, Chris. Let me answer that. Or, you know, let me say this. The objective of this series is to educate. We want to provide you with expert knowledge and, yes, resources. We want to make sure that you understand what the stake is. And if you elect to use us as a resource, that's fine. But we want to make sure that you understand that ANPA's mission here is to make this series a benefit of membership. Now, in regard to your question about resources, what has happened at Wealth RX for Doctors is an aggregation of expertise, like Simon, like you know, Vicky, and so on, in all areas. There are other experts and professionals who may offer the same things. And so it's easy to reach out to us, but we're not the only resource. And please understand that the objective here is to feed you with enough information so you can make the decisions. And you're welcome to ask questions of us. And if we can help and serve as a resource, we're happy to do that. But we don't want to come across as the only resource that's out there.
So if I might, Enye, so I was reading the New York Times this morning, and they have a little article here on page 3, how to choose the right pediatrician. And I think that these little tips here can apply to you. It says, choosing the right doctor for your family is among the most important decisions new parents make. Here are some tips to help you get started. So it says, and so you're trying to optimize your financial health, right?
Yes.
Okay, so start your search early. So there's no time like today. So here you are, educated and enlightened. So today's a great day to get started. Ask others that you trust. So you've probably got some friends and colleagues, and you can just ask them, hey, are you working with somebody who's already proactively managing your taxes? You know, in 2017, did this person come to you with tax savings ideas? Because you might find somebody in your community who knows that. Third, identify your needs and preferences, like what's important to you. And I mean, the reality is that this is not about the numbers, right? This is about being able to live your dreams, to indulge your passions, to be able to spend time with your family if that's what's important to you. Today's the 1-year anniversary of my brother's death. And I think about how he was able to live his life on his own terms. And I think that's what we all want. We want to express our gifts, we want to decide what's important and to live that out. So what's important to you? Why are you doing this? And ideally the person you work with is able to hear that, because it's not just all about the numbers. And then it says, check your insurance, consider the practice. So the practice, you know, when you're choosing a pediatrician, you're not just choosing one person, right? You're choosing a whole team, because your pediatrician might be out one day. Is the office staff like what's the culture there? And I think in a very similar way that baseball is like a team sport, I think wealth building is sort of a team activity too. So, you know, you don't want the gastroenterologist not talking to the cardiologist, not talking to the neurologist for a diabetic who's just had a stroke and a heart attack, right? You want a team that's all working together and sharing information together and working collaboratively towards the same goal. And then last step they recommended is interview the pediatrician and listen to your gut, right? There are some people that you trust. There's some people that you know that you might not trust. I have a friend who was a breast surgeon, and she just thought her office manager was great until she discovered that her office manager had embezzled her entire retirement account, right? And she said that as she looked back, there was that small, still voice that said, you know what? This isn't quite right. So interview these people, make sure they make sense. I mean, you're smart, you'll know what makes sense and what doesn't, but listen to your gut too. Make sure that you are dealing with somebody reputable who is going to put your interests over theirs, right? Just like we put patients' interests over ours.
So just
let me just also say something, just housekeeping. You can feel free to ask questions, or you can type it on the chat. I will ask for you. The last question was, I think, let me ask the presenters, what state are you in, Amy?
yes, I was going to say that. That's exactly what I was going to say. We really have, our experts are all over the world, not just the US. Here we have aggregated expertise all over the world. Simon is in California. Vicky is in Minnesota. I'm in Cincinnati. We have the expertise. And again, this is not about us, but it's about the aggregation itself. So to respond to your question about people in Atlanta, we do have experts in different parts. It doesn't even matter. We're working with clients all over everywhere, all over the world. So hopefully that's helpful.
A question from the chat. It says how to contact the speakers. Amy, is this the best way to contact you on the screen?
Yes. wealthrxfordoctors.com/ANPA. You can call the office 513-769-2700.
Do you have any contacts in Florida, Amy?
Yes, we do.
Okay.
Matter of fact, the tax strategist that saved the orthopedic surgeon $940,000 in Florida. And here's the thing. The $940,000 was the first year. The second year was about $442,000. So he's in Florida.
And yeah, I do have a question for you. Given that, let's just say that you save each one of us thousands of dollars, okay? Is there a way, how does that also benefit ANPA in the long run as an organization? Is there a way for us to use some of the savings? Because we want to save it and keep it to ourselves, right? But we also have social responsibility. Right now we are sort of evaluating a foundation, how to save money to make sure that ANPA continues to be financially stable and to allow us to do things that we'll do in the future. Is there a way to use this?
Absolutely. That is one of the key things that professionals like us would bring to an organization like ANPA. We do that all the time. In fact, you know, if there was more time, I am sure that Simon would have shared some strategies that incorporate charitable giving and things like that. But that's the truth. See, think about some of what we do with taxes as a recycling. Okay, we're recycling monies that you're writing, checks that you're writing to the IRS, and bringing them back in, and you can use the monies for yourself, most importantly, though, think about ANPA as opening these doors to you. And ANPA has causes that are near and dear to you. And my hope and prayer is that through this foundation that's being contemplated and hopefully that will be established, you can give to a cause that's near and dear to you. And ANPA is the one that's facilitating that. If you think about all the missions, all the things that ANPA does. And here's the reality, my friends. If you do the math yourself, grab a calculator, think about each of you here, how much did you pay in taxes in 2019? Whatever the number is, let's say there are 100 doctors that, we do a lot of speaking and things like that to physician groups. So let's say you have 100 doctors in a presentation, and you can think for yourself how much you paid in taxes last year. If we use $50,000, if we use $50,000 as the tax, and believe me, that's low. You know that. We just saved somebody in 2017 $1 million, 900 and something thousand dollars, over $1 million, over, and those things are recurring, by the way. So think about $1 million, $50,000. I'm using a low figure. 5 million. If you have 100 ANPA physicians, that's $5 million. If we save you 30, 40, 50% of that, that's $2.5 million. If you give to ANPA 10%, 20% of that, by the way, that's money that you're writing in checks to Uncle Sam. Don't forget that. And I use the low $50,000. The interesting thing is 50,000 is the lowest threshold that we look at to help with tax savings. Doctors are paying too much in taxes. You can recycle the stuff and help causes that are near and dear to you. ANPA is 26 years old. Imagine how many $1 million of monies you could have recycled over the 26 years of ANPA's existence. There's over 4,000 Nigerian doctors here, over 600 ANPA physicians that are paying annually. Just do the math. When I tried to do the math myself, my calculator broke. Do the math. ANPA needs the foundation. ANPA needs your recycled money. And hopefully those things can happen. Thank you.
There's a question on the chat. Is there any representative in Pennsylvania?
Yes.
What is the financial cost of having a consultation with one of your experts?
It depends. It truly depends. An engagement is it's a process that we have to go through. And the thing that I can assure you is if you come to Wealth RX, there are a couple of things that basically derive from the relationship that we have with ANPA. And just to put this in perspective, my friends, I have been associated with this association from its founding. I was actually on the faculty that I gave one of the first presentations at the founding of this association 26 years ago. I have a lot of friends who are part of this association. You get the benefit of that relationship in some discounts that we apply because of the relationship, but it depends on your situation.
I would say when we had our own, just for full disclosure, I have my own financial team. And when I started exploring this a few years ago, let's just say they were going to charge me maybe about $8,000. It was so hard to swallow. But then when you look at how much money you save and how much money let's say they were setting up the defined benefit plan for me at that point, how much money we have saved over the course of over the last few years is just the investment is well worth it. Is this big return on the investment. The ROI is great. There is a question. I think that the presenter is sounding too much like he is selling ANPA more than educating us about taxes and finances. Well, it's a good thing. I just wanted to make sure that when I invite people to speak to us, I want to make sure that they're not selling I want the whole idea is to educate us so we can make informed decisions. But of course, ANPA is this is not a sell ANPA, but is a benefit of our membership. What were you gonna say, Amy?
No, you said it. Thank you.
Okay. If there are no other questions, we are a little bit over time. I want to keep this at 15 minutes. We're going to be having these presentations at the first Saturday of every month, and it's going to be 1 hour. So the whole curriculum has already been set. We are open to accept other suggestions for the webinar. Again, the whole idea is to give us the financial information so we can be financial literacy and education so we can make the best decision for our own personal and business. I would bring our president to take us home and close it at this point.
Once again, thanks to all the expert speakers who have actually shared with us their knowledge. I can say I have my note full up with all the jottings I made from the presentation. And again, on behalf of ANPA as a group, we thank you and we continue to look forward to your expertise as you continue to be ready to share this expertise with us. And we thank you once for all your help. And Stanley, thanks for putting this together.
Thank you, everybody. Have a wonderful weekend. Be safe. Talk to you
Real quickly, Stanley, if I could just end on this note.
Yeah.
The first Saturday of every month at noon, 9 a.m. Pacific, just a reminder.
That's correct.
So we look forward to the next presentation, which will have another expert on a subject we'll announce shortly.
All right, have a wonderful weekend, everyone. I'll talk to you all soon.
Thank you.
Yes, the presentation will be is recorded. We're going to post it on the ANPA YouTube page, and once it's edited, it will be posted on the WhatsApp pages and ANPA EE group as well. Thank you.